introduced both our guests. We have Sneha Podar with us, and we also have Kunal, as always, with us to take us through the show. And let me take up the first query as well. We have Amarjeet from Dubai. Sneha, for you, what he wants to understand from a longer term perspective is whether Pidilite and an Astral and an Asian Paints, in fact, those are the three stocks that he wants advice on, whether long term those three are a buy at the current price.
Okay, yeah. So all these three stocks are fundamentally a very sound business model. All these three stocks have got. So from a long-term perspective, one can definitely start accumulating in a staggered fashion. I would say that that's the best advice to accumulate. Probably he can do a SIP in these stocks so that he can average at lower levels as well. All these three stocks have very good growth prospects, and he can definitely look at adding these three.
So now the next query is from Raja, and this one is on Max India. They have 500 shares that they bought at 103 rupees per share. Now currently it's at around 159, they're saying. So what is your advice for Max?
Well, I would suggest to book profits over here. It seems like the stock is getting into a bit of a resistance zone for itself. The run-up has also been quite interesting for Max India. So I would think at current levels of 160 plus, it's a good time to book out profits.
Right, Kunal, I'll stick with you. We have a query from Silva Pandi from Chennai. Bought Johnson Controls in October 22 at around 1,230 bucks a piece, 75 shares thereabouts. Of course, at 970, should she wait? Should she average? How should she go about?
See, I think we should look to exit the stock now. I understand that the stock has been underperforming, but every now and then the stock has been forming a pattern of lower highs and lower lows. You look at the last 4 months, you look at the last 1 year, and in both the time frames, the stock has formed a very similar kind of a pattern. So it doesn't make sense to hold on to the stock. I think the best which you can do is maybe just hold on for another in a couple of weeks. But then if the stock comes back to say 1,000, 1,050 odd trading range, that's actually good territory to try and exit the stock.
Okay, Sneha, the next one, and this one is coming in from Akshay from Bangalore. They want to know, they're looking to buy Adani transmissions for a time period of around 1.5 to 2 years. What's your view on this one? Could you help whether they should actually look at entering Adani transmissions?
Sorry, we don't have view on the same.
Kunal, do you have a view on Adani transmission?
Yeah, I think you should not be looking to buy the stock. It's been a huge underperformer, I think, from the January or the February lows when the correction started for the most of the Adani group of stocks. And I think from there, the stock has been unable to lift off into any kind of a major trend. I would believe that a major multi-month, multi-year consolidation could be at play for Adani Transmission and most of the other stocks from the Adani pack, which are actually underperforming. So I think it's best to stay away from this pack as of now.
Right, let me quickly switch over. Sneha, we have a viewer, Parvinder Singh, who wants to understand prospects on SJVN. Now, the stock has had a stellar run, right? Last 6 month returns almost 68% and just keeps getting better. I mean, over the last month or so, up almost 40%. What's your sense now with regard to valuations? He's a long-term holder and at least wishes to hold for the next 6 to 10 months is what he's asking for.
Okay, so SJVN, as you mentioned, has really got very good prospects because the kind of MOUs that they have signed recently. So it's huge in size, which really shows the kind of earnings potential that would unfold over next few years. In fact, recently it had signed with Maharashtra, with Arunachal Pradesh, and I think with one more state they had signed the MOUs. He can definitely continue to hold the stock from next 1 to 2 years perspective because the earnings growth would be really strong for the company. If he's making a fresh entry, then probably he can wait for some cooling off. But I really have my doubts whether the stock would cool off in the next 1 month or so because the kind of order book that they are building on it's less likely that the stock might cool off. So I would suggest he can probably start entering in a staggered fashion, and if he gets the opportunity, whenever the stock cools down, he can further add to the to his holding.
That's the view on SJVN. But let's move on and talk about Bharti Airtel and IRFC, Kunal. Carol wants a target for both these. They've not mentioned, whether they're holding it or what is it. But if one is looking to buy right now, would you suggest that, and what would be the target?
You mentioned Bharti Airtel and
IRFC.
IRFC. So I would suggest to hold on to both of the stocks. Bharti Airtel, I think on the upside, you can probably expect 940, 950 as a target. And it's a stock which is done consistently well. So it all depends on the time frame. So if you're looking at it from a short-term play, then maybe 940 odd could be a target which you can keep for Bharti Airtel. For IRFC, I think the stock is getting ready for a breakout on the upside. I think most of the railway stocks are looking very attractive to me on the charts, purely from a long-term play. But I'm not sure what's the exact time frame which you're looking out for. But if it's short-term kind of a time frame, then 36, 37 could be a target for IRFC. But as I said, if you hold on to both of these stocks from long-term, by that I mean at least 1 year, if not more, then I think that the bigger breakout could happen for both of these stocks.
Right. Sneha, we have Kaji who wants to understand your views on Canfin Homes. Now, it's a tricky one because of all the news that came in yesterday. Some amount of underconfidence still getting picked with regard to where the stock price has gone even today. How do you look at Canfin Homes at this price?
At this price, I can say that one can probably look at entering if he really wants to play the housing finance segment, because see, fundamentally this company has been able to demonstrate a good profitability over the recent quarters. Even its asset quality has improved over last few quarters. So we believe that we can expect a double-digit kind of growth going ahead with their return ratios improving. Probably at this price, he can look at entering Canfin. Otherwise, the other option would be Home First Finance, which is also a good play in the housing finance segment.
Okay, let's move on and talk about the next query that is coming from Sunny. And Kunal, this one is for you. He's holding Jupiter Wagons that bought it at around 58 rupees somewhere approximately last year. Should one actually book out their profits now, or what should they be doing?
I think the stock has run up exceedingly high. It's now entering into the extreme frothy territory in terms of indicators. Now, I think at 232, the weekly RSIs are at 80 plus mark for Jupiter Wagons. So, I think at these point of times, it's always better to try and start booking out partial profits on every rise, or at best, you can trail your stop losses to maybe 220 or 215 levels for Jupiter Wagon. And as now the stock goes up higher, keep on trailing the stop loss. So I think that's a better strategy for the stock at current levels rather than adding or looking to hold on.
Right. Those are the views coming in for Jupiter Wagons. But with that, let's slip into a very, very short break. More on the other side. So stay tuned.
Welcome back, and you're watching Buy Now Sell Now on ET. Now this is a show where we solve all your stock related queries, and today to solve our queries we have Kunal as well as Sneha. So let's keep it going with those queries that you all are sending us, and if you all have not sent us, you can send us your queries on the WhatsApp number that is flashing on the screens. Let's keep it going then, and the next query we have is coming in from a senior citizen from Cochin whose name is Korean, and they want to know on Lux Industries. They have 35 shares of Lux Industries which they bought at 2,467 rupees over a period of 2 years. Kunal, what is the view now? Should they actually book out their profits? What should they be doing? Book out, or should they continue to hold average? What is the strategy they should use now?
I think you should look to exit the stock. It's been an underperforming stock as such, trading now at 1650 odd levels, recovered. I think the last quarter low for Lux Industries was around 1100 mark. So I think from there it's recovered more than 30-40%. But then nothing attractive in terms of the charts. The all-time high for the stock is still at 4,600 levels. So I am not sure whether the stock would probably go into an immediate rally, but my belief is that the stock should underperform and get into this trading range. So what we've seen is one of the better bounces for the stock price, and it's a good time to try and exit the stock rather than building up positions.
Right. Let me quickly take it to Sneha. Sneha, we have KB Rao from Hyderabad asking about your views on Ashok Leyland as well as Rajesh Exports, long-term investor, of course. Now, when you see Ashok Leyland's chart, it's gone only up and up, 20% higher year to date, and you're seeing Rajesh Exports, which is actually down 50% almost from its year-to-date high. So what's your sense on both of these numbers?
Okay, so Rajesh Exports, I don't have any view in terms of Ashok Leyland. The company is really benefiting from the revival in the CV cycle, and if you have noticed, like generally the year prior to the general elections, the CV demand tends to pick up. So we expect Ashok Leyland to benefit from this uptick in the CV demand. If you look at the results as well, the company has been posting a good set of numbers, which actually builds into our confidence. They're also trying to improve their market share in the light CV segment. So overall, we are quite positive on the stock, and one can definitely hold on to it.
Kunal, the next query is on two stocks. One is Infosys and one is Sharda Cropchem. This query is from Vishal from Dubai. So they have Infosys at a price of 1,614 rupees and Sharda Cropchem at an average price of 632 rupees. Is it a good time to accumulate both these stocks a bit more, or what should they be doing with this now? If they have a view of a long term also and short term, what should they do now strategy wise?
Well, Sharda Cropchem, I would believe that you should look to exit. Now, I understand that the stock has corrected very sharply in the last 3-4 weeks. So it could be at a cusp of a minor bounce from current levels of 445. So maybe closer to 480, 490 could actually be a good level in case if the stock bounce off to that territory. But I believe that it's a better strategy to try and exit the stock. And Infosys on the other hand, I would still believe that it's actually a good time to try and look to increase positions on every marginal dips. My sense is that a stock which fell very sharply last week or so on the back of results, has not fallen or broken below its previous major lows, which it had hit in the month of March 2023. So I think in that aspect, the stock could probably stand to be a bit more resilient stock. And Infosys has proven its quality over the last decade and more for itself. So I believe that Infosys could be a much better buy. Sharda Cropchem, you can look to exit on every minor bounce.
Right. Sneha, we have Reena Thomas, who's a senior citizen. She holds 2,000 shares in IRB Infra at 27 rupees a share, largely a long-term investor. What's your sense on that one?
I would suggest to exit from IRB Infra and rather move to much better quality plays like Capacit Infra or PNC Infra. These companies have much better revenue visibility given the strong order book that they have built up. IRB Infra, on the other hand, is a very riskier stock compared to these ones. So exit from the same.
Now the next query is from Ayushi, and she's holding some of these shares that she's mentioned and she's making a loss here. Now, which one of these should she continue holding and what should she look to sell? She has Jubilant Ingravia, Rain Industries, Dalmia as well as India Cement. So what is your view on this one? Like, should she book losses in any of them or continue to hold them?
See, Jubilant Ingravia, that's a stock which I think is actually starting to look very attractive. Because the stock seems to have formed a major bottom for itself, sub the 400 mark, now 425 odd levels. I think the previous high for Jubilant Ingravia was somewhere in the range of 470, 475, which means that the chart patterns are a lot more better for the stock. Rain Industries, also I think it's a high beta name, but I think again the chart patterns have seen the worst for it behind. The stock fell very sharply from 400 in 2018 to at a point when it was almost at 40-45 rupees. So after falling by more than 80-90%, the stock is trying to find its feet back again. So maybe the worst part of the trend could be behind for Rain, and so would be the case with Dalmia Bharat as well as India Cements. I think for both of these stocks also, I believe that we are heading into some sort of an oversold territory in terms of correction. So all four stocks, frankly, to me look very attractive. I would suggest that at least hold on to the stock, if not add more.
Right, and Sneha, we have Hamza from Madurai who wants to understand your views on NCC. Current market price, good buy?
Well, not a good buy at current levels, but it's a good stock to hold on, for good mid-cap stock to hold on from a medium to long-term play. But I think at 139, the trend looks to be a bit more stretched. So I would not suggest a buy on NCC at current levels, but wait out for a correction. I think if I'm not wrong, 125.26 is the first point of a was the first point of a major breakout for NCC. So if it happens to come back to that territory, that could be a good starting point. So you can keep it on your radar, but 126 approximately could be a good buying territory. We can start buying NCC.
Awesome. That's from a technical perspective. Let me take it to Sneha for a fundamental view. Sneha. Yeah, Sneha, your
Yeah.
view.
Yeah. So NCC is actually the company has a very strong order book, so revenue visibility is definitely there. But yeah, the stock has run up a lot in the recent time, which makes the valuation a little overstretched. So probably the investor can wait for the stock to cool down a little. From a long-term perspective, it holds a very bright prospect.
Sneha, coming back to you, we have Ravi, who's a long-term investor and wanted to know on KPI Green. Should they enter KPI Green right now? How is it looking fundamentally for the long term?
Sorry, we don't cover the stock.
Kunal, you cover this stock, KPI Green?
Well, I do look at the charts occasionally, but yeah, I think again a stock which has low liquidity, that's the first big concern for the stock price. Last 2 months, it's risen from 450 to 900, which means already a gain of 100% for the stock price from the previous 2-month lows. And even prior to that, in the March low for the stock was around 400 levels. So it's already performed quite well. Better to try and buy the stock on corrections. First level of support for KPI Green could be in the range of 750 to 780. If it happens to come back to that territory as a minor correction, that could be a good starting point if you're looking to buy.
Right. Thank you for that. Let's quickly slip into another very short break. Keep your queries coming in. We're keeping a track of those, and we'll take it on the other side of this break. Right, welcome back. You're watching Buy Now, Sell Now on ET Now. Very quick check on the Nifty Bank. It's in fact fallen 100 points since the start of the show. It's also down nearly 350 points from the top today, so 0.5% lower on the Nifty Bank. Marking that out very quickly, only 3 gainers on the Nifty Bank. Bank of Baroda, Federal Bank and SBI. But quickly moving on, we have Amit Kumar Sinha, MD and CEO, Mahindra Lifespace is with us. Let me first ask you, sir, the residential pre-sales have declined both sequentially as well as year on year. Most peers are reporting a good jump. So why? Have launches slowed down? What's the pre-sales target for FY24?
We have given a guidance of 2,500 crore pre-sale for FY25. Not for F24, but F25. And we are sticking to that guidance for now. With respect to F24, we were expecting one launch that got delayed because of some regulatory changes, which will happen in a subsequent quarter. While this quarter shows a little bit of a smaller increase or smaller pre-sales, but we'll make it up in the later quarter.
Right, Mr. Sinha, good morning, and this is Vinny joining in the conversation as well. What I also want to know is, you have a very aggressive target of 5x growth over the next 5 years. Are you confident of achieving this guidance? What is driving this confidence that you have right now?
Yeah, so 3 parts. I'm glad you asked the question. As you know, we have been in the real estate business for quite some time, industrial as well as residential. We have seen a lot of success over the last 2 years, especially in the residential launches, giving us a lot of confidence that we're able to scale up. So 3 reasons we believe we are ready for the next stage of scale up. First is overall market buoyancy. We see the real estate cycle turning for the right reason, and it will continue to be strong for the next several years. In fact, within the real estate cycle, we find that there is a flight towards quality developers, and we hope to benefit from. That's the market is very supportive for us. The second part is Mahindra and Mahindra as a group is solidly behind us. They have committed support. I used to be in the M&M side. I used to head the strategy function for the group. And Mahindra is solidly behind us. That gives a lot of confidence that with the might of the group, we'll be able to push our aspirations to the next level. And finally, we have seen the 5x is something that many of our peers have achieved. And we feel that given the strength that we have, the capabilities we have built over the last few years, 5x is going to be is possible. In fact, if you look at the market share of most of the organized players, the largest player is 5 to 6%. We are less than 2% across all our portfolio, across all the markets as part of the organized players. So there's a huge headroom for growth for organized players to take share away from unorganized players, and 10K would not be a big task if you execute with that.
Right. And, on the revenue recognition front, it had improved over the last couple of quarters, but again, it's taken a bit of a hit, if I can call it, in Q1. What's been the setback? Is it executions, deliveries, how should one expect revenue recognition to pan out going forward?
Yeah, so the revenue recognition is a tricky one in this business, as you know. We can't recognize revenue till we have an OC in hand. So it's dictated by some of the approvals. Two of the approvals slipped from Q1 to Q2 this year. That's why you're seeing a little bit of a low revenue in the Q1 of financial year 2024. However, we're quite confident that that's a question of just small delay. We'll make it up in the subsequent quarters. And we continue to be robustly behind what we have expected for the rest of the year in terms of the revenue.
Right. Also, just want to know is what is the kind of inventory you have on hand? What is the launch pipeline you are targeting for the rest of the year, and the sales potential as well?
Yeah. So we have in the last quarter, I announced for this financial year, we have 9 launches that are planned. These 9 launches in total add up to roughly 4,000 crore of GDV, as we call it, to answer your question about inventory. But that is spread across a few years. It's not all inventory available the same year. 4,000 crore will be launched to the launches this year. We also have roughly 2,000 crore worth of inventory, which is some project that has been launched in the past year. If almost 40 to 50% would be a target for us to be sold.
Right, and if I may ask, how is the IC&IC segment performance shaping up for you? How material could this be going ahead?
So just a little bit of background for the IC&IC. It's integrated city and industrial cluster, and it covers some of the locations that I mentioned in the previous comment. It has Chennai, Jaipur, Ahmedabad, Goa, and Mumbai. In the previous year, F23, we had one of the best years. We had 456 crore of sales from an IC&IC segment. This year, we continue to have strong pipeline across all the very well-developed locations like Chennai and Jaipur. This is a lumpy business, as we know. It takes some time to grow. So the current quarter saw a small sales, but we have a very healthy pipeline. We have to work hard and work closely with our customer clients to convert that into business for us. But many of the LOIs, expression of interest, have been signed with us. We are doing the due diligence. They are doing the due diligence and we support.
Okay, Mr. Sinha, thank you so much for joining in with us this morning on ED Now, giving us an understanding on what we should be expecting from the company going forward as well. Let's move on and talk about just a quick check at what the markets are doing right now as well, and let's look at where the Nifty is standing. Nifty seems like it's fallen off as well. Nifty is down almost 0.25% as well. So keeping an eye out on the Nifty. Yes, look at it. It's fallen at the day's lowest point as of now, 19,737. So nearing that 19,700 level. So keep an eye out on the Nifty and the Sensex and where the markets are moving. But With that, let's keep it going with all your stock related queries then, and continuing with those queries. And Sneha, coming to you for the next query, and we have this one coming in on Bank of Baroda. The viewer is holding 500 shares of Bank of Baroda at 199 rupees. Should they continue to hold Bank of Baroda or maybe look to sell?
They can continue to hold the Bank of Baroda because given the kind of loan book growth that they have been seeing and the kind of asset quality improvement that has taken place over last few quarters, it really gives us a lot of confidence in this mid-sized bank. And we are expecting the double-digit around 15-20% kind of loan book growth to continue over next 2 years. And even the margins are likely to remain quite healthy for the company. So overall, we are quite confident, and one can definitely continue to hold. We have a long-term target of around 240, 250.
Excellent. Let me quickly move it to Kunal again. We have Chandrasekhar from Bangalore. He has 150 shares of Suntech at 451 bucks a piece, around 20% or so lower. So he wants to understand, should he average, and what would help him recover from this 357 to the 451 level. Also, with regard to Dishman, he's bought it at 159. What's your view on it, hold or exit?
So for Dishman, you should definitely look to hold on to the stock. I would not suggest an average at current levels, but I think the existing quantity should be good enough. The stock has started to get into a trending mode. So I would suggest a hold on Dishman. Suntech, you can look to average once the retracement starts off for the stock, and the retracement, first leg of retracement is around 340 and the second support is around 329. So which means 330 and 340. These are two bands where you can look to average Suntech and hold on to the stock. I think very recently it's managed to break out of the 200-day moving average. So you can look to ride the trend, but if you're looking to average, bring your cost price lower so that you can get in the money a lot more earlier. I think 330 to 340 could be a zone where you can look to average.
Sneha, the next query is coming in from Ravi from Hyderabad. This is on Aditya Birla Sun Life AMC. They're holding it at 200 shares at 591 rupees. Should they continue to hold or maybe look to sell?
Okay, I would suggest to exit the stock. Actually, the AMC stocks somehow continue to face some of the other regulatory issues, and even their overall the earnings performance is a little muted for the AMC companies. So I would suggest to look for move to some other sectors which are likely to perform better over next few years. So probably he can look at moving to good NBFCs Chola Finance or Poonawalla FinCorp, which offers a good visibility over next few quarters at least.
Right, and Kunal, we have Ajay who holds HCC. He believes that, or rather, he suggests, and even I'm aware that you're quite bullish on HCC. What's your sense over the next 3 to 6 months? It's below 20. Do you believe that this is a good price to enter?
Well, yes, I think it's a good price to enter the stock. It's a high beta name, of course. But then I think on the charts, it's on the verge of a major downward sloping trendline channel breakout. So, and this has been going on for HCC, I think since 2007, 2008, if I'm not wrong. So it's almost like a 15-year-old trendline channel, which is on the verge of breaking out for HCC. It may take some more time, so I'm not sure whether on the very immediate short term that the stock could probably give any kind of a strong upside, but potentially once this channel pattern resistance gets taken out, I believe that a bigger uptrend could ensue for HCC. So I would be bullish in that aspect, but time frame for short term may not be an ideal time frame for HCC.
Kunal, we have one more query that's coming your way, and this one is on Rajneet from Gurgaon. They are holding VIP Industries, 100 shares at a price of 674 rupees. What should they do with this? If you say sell, then what should they buy if you're advising a sell then?
Well, yeah, I would recommend a sell for VIP Industries. I think it's been an underperformer even the last 2 years. The stock has been absolutely sideways, so it doesn't make sense to hold on to the stock. I understand that the long-term charts have been very bullish, but many a times when the stock goes into a consolidation, it could enter into multi-month, multi-years of consolidation, which I believe could probably happen for VIP Industries. So in case of the stock dips back to say 450 or 500 mark, that could be a point where you may look to buy the stock at lower levels, not at current zone. In case if you're looking to sell and looking to shift to some other name, I would recommend something like L&T Finance, even at current levels of 130, 131 where it's trading right now, as a good alternative bet for medium to long term.
Right. Let me quickly take it back to Sneha. Sneha, we have VV Sharma from Bangalore, has shares of Yes Bank and South Indian Bank. Now, what's your view on this? Because should he continue to hold these, or do you suggest alternatives within the banking sector to try and pick on instead of these?
Okay, I would suggest to exit from these stocks and move to better quality names. Though Yes Bank is trying to revamp the entire its business lending business, but I believe it would take time to really materialize. So it's better to move to better quality names. Like I would suggest IDFC First Bank, which is a much better play, and the kind of growth that they have been seeing over last few quarters is really good. They are trying to actually reduce their wholesale lending book and trying to increase their foray into the retail segment, which would drive the growth over the next few years. So we can really see the improvement in their return ratios and their asset quality, and this trend is likely to continue as the retail book continues to ramp up. So IDFC First would be my pick in the mid cap private name.
Excellent. With that, we'll slip into another very, very short break. Do keep your queries coming in. We'll take them up at the other side of this very short break.
Welcome back, and you're watching Buy Now Sell Now on ET. Now let's keep it going with all your stock related queries then. Sneha, the next one coming your way. This one is on Reliance Industries. Rao has 140 shares of Reliance at a price of 2,380 rupees. Is it still a good time to add more, for if they're willing to hold for a long term of around 4 to 5 years?
Definitely, one can add Reliance Industries at these levels, as the valuation is pretty decent, and probably what he can do is he can add it in a staggered fashion, as the stock might consolidate for some time given the weak numbers that they have posted. So he can look at adding from this in a staggered way. From a long-term perspective, if you look at, there would be a lot of value unlocking which would unfold in the company, and the newer segments would gradually, once they get the scale, they would start performing. So I believe the dependence on the oil and gas sector would reduce drastically over next few years. So one can definitely look at holding this stock.
Right, Kunal, we have Geeta from Dubai. She holds 250 shares of Sona Comstar at 562 and 150 shares of KPR Mills at 650. Wants to understand whether she should hold. Can she buy more at these valuations? Also, she suggests she's a big fan of yours.
Thank you so much for that. So the view would be a bit tricky over here, because Sona Comstar actually looks very attractive. The stock has done reasonably well. I was looking at the charts for the last 6 months, the last 1 year approximately, 4, 5, 6 months approximately, from I think February or the Jan lows for the stock when it was at 400 rupees. So it's done reasonably well. There is expectation that the stock can stand to continue to move up higher. It's shown all of those classical signs of confirmation which we look out for in terms of a breakout. So I would suggest a hold on Sona Comstar from a medium to long term play. For KPR Mills, it could be a bit tricky, because the stock historically has done well. It's just that the short-term charts have been unable to find any kind of a major breakout. Largely the stock has been to a range of 480 to 660. It's a very good quality stock from a long-term play. So my only sense is that for KPR Mills, if you have a long-term time frame, then it makes sense to hold on. Also keep a level of 540 approximately, which is the median of this range for KPR Mills, as a good range where you can look to average further.
Right. On that note, let's get started with the rapid fire then. And Kunal, the first one for you is on Hari Om Pipes. This is from RK. They're making a 15% loss here. What should they do?
Look to exit.
Right, let me take it to Sneha. Sneha, we have Bharadwaj from Coimbatore, 220 shares of KRBL, average price 236. Should she add more?
I would suggest not to add more, but he can hold on to the current holdings.
Prateek from Mysore wants to know on UPL Kunal. They are holding 95 shares at 709 rupees. Do they sell this when they break even, or what should they do now?
Well, I'm not sure how much time it will take to break even, but I think at current levels you should look to exit the stock, if not add.
Right, Sneha, we have Bhaskar from Hyderabad, HBL Power, 300 shares at 105 in profit. Should he book?
He can look at partial profit booking.
Kunal, Easy Trip, good stock for the short term?
Well, yeah, good stock from a short-term play, but I think closer to 45 could be a good breakout point where you may look to buy.
Right, Sneha, we have Aquarius New Gen, 120 shares at 503. Should he book profit? Should he hold? What's your view?
He can look to book profit and move to better names like Scient or Persistent.
Sneha, we have Panduranga, who's gotten allotted Utkarsh Small Finance Bank. They have 8,448 shares. Should they continue hold this one or book profits?
I think they can book profit as the valuation gap which was earlier there. The discount has now completely gone. So probably he can look at booking profit and then can once again enter the stock once the stock price cools down a little.
Right, Kunal, we have Parvinder Singh who holds Star Cement and Shriram Finance. Around 6 odd months is his holding period target. What's your view on Star Cement, Shriram Finance?
Hold both of these stocks.
Sneha, we have a senior citizen Pradeep who wants to know on Motherson, Samvardhana Motherson. They have 150 shares at 79. What should they do with this, hold or exit?
Definitely hold on to the stock from a long-term point of view.
Right, with that we're completely out of time. Thank you so much Sneha as well as Kunal for giving us all and our viewers all of those views. But with that we're completely out of time, as I did mention on the show. From Vinny, myself and everyone who puts the show together, thanks so much for watching. Markets at noon will take the action forward.